Donald Trump Jr.'s investment firm has just posted staggering returns of about 200, a figure that makes headlines because it eclipses the average of roughly 21% that most venture capital funds started in 2023 rake in, according to PitchBook data. The firm, called 1789 Capital, is run by the president's eldest son and his partner Omid Malik, and it has turned what was a little-known venture into a multi-million-dollar phenomenon. The story begins off a hotel rooftop overlooking the Milwaukee skyline, as the Republican National Convention closed in July 2024. Trump Jr., looking for a deal, found a 26-year-old founder of Polymarket, Shane Kaplan. Polymarket is the prediction market betting site that had been barred from taking U.S. wagers but was granted a federal operating license last year. Trump Jr. was impressed by how the platform's outcomes, rather than polling numbers, reflected voter sentiment about his father's potential return to office. That meeting sparked a partnership that would prove lucrative. Polymarket's value exploded after 1789 Capital wrote in. Worth $300 million when the firm invested, the platform is now valued at $15 billion, an astonishing jump in just a few months that illustrates the scale of the returns Trump Jr. and Malik are describing in a New York Times interview. This isn't the first time the Trump family has blended business with politics. Members of the family faced criticism since the first administration for pursuing deals that might benefit from policy changes. What makes the current move stand out, according to insiders, is how openly 1789 Capital pursues companies tied to the current administration's agenda, without any suggestion of a conflict of interest apology. Beyond Polymarket, the firm has taken stakes in other high-growth private companies, SpaceX, Anduril, Cerebras, and Reflection AI, often buying before many of those co-companies went public, and leveraging political align to boost their sales. Many 1789 holdings have large government contracts, and some directly benefit from rolling back regulations or implementing new policies pushed by Trump's office. The firm's aggressive strategy has paid off. 2 years ago 1789 only managed a few $100 million in assets, and today it oversees more than $3 billion. In a conversation with the New York Times, Trump Jr. explained his approach, stating, "He just took sort of the approach that we did, which is like, fuck all you guys." The quote reflects the stark confidence the firm exudes, unapologetic about its alignment with the administration's policy direction. The numbers speak for themselves. As of June 30, the firm's main investment fund generated returns of roughly 200%, about 10 times the average return expected from 2023 venture capital funds, an achievement that might seem impossible for a relatively new venture. How, you might NS Textfield think, did a few $100 million grow into billions so quickly? The answer lies in the firm's back-channel connections, its focus on tech sectors trended by the administration, and its willingness to take calculated risks on companies like Polymarket, which benefited from a regulatory shift. It remains a question for observers whether this openness will attract more scrutiny, but for now 1789 Capital is riding a wave of political synergy and pioneering tech that has delivered returns no other new firm has matched in the same period. Thank you for listening. Join us next week for more analysis of how business and policy intersect in today's political landscape.